Welcome to Nirmal Bang, ladies and gentlemen. I'm Madhya. We have with us Mr. Kalpesh Dave, Head Corporate Planning and Strategy at Star Housing Finance, joining in. Welcome to the show, Kalpesh, and a pleasure to speak to you and get insights from you in today's call. Kalpesh, my first question coming to you is, overall, if you see in terms of the industry as a whole, clearly there have been ups and downs, but last couple of months have been really strong for the housing sector. How would you describe the last 12 to 18 months?
Good question. Hi, Hiral. Pleasure to be over here. Thank you so much for inviting me over here. Very important and pertinent question because Hiral, housing, as we all know, is a parameter of growth of the economy. More than 250 to 300 allied industries depend on housing, and more of so given that, in the current times of COVID-19 pandemic, we have seen the first wave, second wave, and third wave. But see, what is pertinent that we have seen, despite all these, events once in a century that have happened, there has been an inherent latent demand. Okay, more so in terms of, if you talk about, if we divide the overall geography of India into two, one being the urban and second being the semi-urban and rural geographies. Semi-urban and rural geographies, the demand has been intact. In fact, we have seen robust home loan application flow coming from these locations. So we operate basically in the semi-urban and rural geographies, and that's where the demand for construction of houses, construction of individual housing units, construction of the affordable housing units as such, the projects like G+2, there has been a strong demand. The demand has remained intact. What we have seen specifically over the last 12 months, Hiral, is that even the urban areas where the inventory levels was building up, it was more than 36 to 38 months over there. Over there also inventory levels have now come down to less than 9 months. So obviously there has been a definite pickup across the geographies, across the sectors. More importantly, in the low-cost housing space, what we call it as affordable housing units, there has been a strong demand coming from them. Basically factoring in the reverse migration that has happened in the rural parts of the country, and the nuclearization that we erstwhile saw in the urban geographies, that is happening in the rural geographies as well. So these two factors are contributing to the increased demand in the rural aspect of it as well. But then, having said that, over the last 12 months, we have seen the demand picking up across the segments. Just to answer to your question.
Right. So with this kind of demand pickup, how is rate increases by the RBI, actually being taken? I know it's just the first rate hike, but there is anticipation of a lot more that could be in the offing. So how is the demand being impacted?
Okay, so you have to consider the overall, aspects of housing finance as such. See, there has been cyclical, things that have been going on with respect to interest rate, and we were just at the fag end of the lower interest rate cycle. The interest rates had to, increase from the run because we were at an all-time low in terms of the, repo, the reverse repo rate, there in the market. Why this inflation happened? Obviously, because of the macroeconomic environment not being heating up, primarily due to the crude oil prices, as well as the the war situation that is happening in the Ukraine and Russia. So all these two basically factors contributed a lot to increasing the interest rate just to contain the inflation. Now, when you translate it to the end user, end borrower, how would you want to see it? The end borrower would definitely get impacted by it. More also in case of the ones, majority of them are under the floating rate regime. So obviously there will be an increase in the interest rate. There will be increase in EMI, either increase in EMI or increase in tenor. So that would be there. But when we see the need-based housing, okay, the people who actually are looking to purchase their own home for the first time in their lives, the biggest asset being constructed in their lifetime. When you take that particular thing into account, the interest rate as such becomes secondary for them. What is important for them is to basically get the right credit at the right point in time. So when you consider those two aspects being met, obviously the interest rate basically takes kind of a backseat. Not that it is not important, but then interest rate consideration comes secondary. You want to ensure that you get that particular asset at right time. So interest rate comes secondary. However, to answer to your question, I would say that, now is the time for the borrowers to consider switching on to the fixed rate home loan products that many of the lenders are offering. Obviously there will be a higher EMI outgo, but then when the floating rates are linked, with the repo rate, and repo rates are increasing, there is a bound to change in EMI, and your entire planning might get disturbed. So obviously makes sense to now switch on to the fixed rate regime from the existing lenders. There might be, increased EMI outgo, but then, there is a visibility that, you have to pay this much amount of time. So obviously, it would make sense, but not much of a difference for the person who would want to purchase an asset, and interest rate comes secondary for them.
Right. So with all of this, if you have to take the different segments of business that you're into, which are the growth drivers and what's the current, AUM contribution?
So if I, talk about my business segment, my customer segment, see, we are the lenders who are enabling the credit to this economically weaker section and low income group people. So who are these people? Where they come from? These are predominantly coming from tier 2, tier 3 towns. They are coming from, semi-urban and rural geographies. Majority of them, are having a change in their lifestyle. Their income levels are kind of increasing over a period of time. It's the first time in their lives that their families are seeing visibility to create an asset in their life cycle. Not to mention the class of population that has reverse migrated from the city centers to the rural backyards or the native place for that matter. This is my customer segment, and as I told you, the demand over there has remained intact. Okay, even during COVID times, the demand has remained intact. They continue to construct their own homes. They continue to purchase new housing units depending on their affordability. So this is more or less, this segment is more or less insulated from the vagaries of even interest rate or demand, or even any other construction cycle for that matter. That demand has already been there, and this segment, Hiral, has been increasing its overall book. When you talk about the overall mortgage book of India, out of that, this economically weaker section of low income group segment that constitutes the affordable housing finance piece, that has been growing double the rate of the long term growth of the overall mortgage piece. So definitely that demand is there, and we are ones to basically ensure that they get this credit at right price, at right time, and the right amount. So that is what we do. Where are we operational? We are operational, as I said to you, in tier 2, tier 3 towns and the semi-urban and rural geographies. We have our own, digital lending suite, which we have deployed, by virtue of which our physical, presence gets doubled. So basically, it's a hub and spoke model that we employ over there, and we reach out to this particular populace. My AUM, if I talk about, my AUM is overwhelmingly consisting of more than 90 to 95% is retail in nature. And the customer segment is economically weaker section. My average ticket size is around 11 to 12 lakhs, and you can understand from that, what geography or what kind of house I am basically funding to. So that is something which is my overall customer segment here.
Right. So overall, currently in terms of geographies as well, what are the expansion plans looking like?
So if you talk about, the geographies where I am present right now, I am present in the states of Maharashtra, Madhya Pradesh, Gujarat, Rajasthan, and Tamil Nadu. At these locations, I have 7 physical branches and more than 15 digital points of presence. So total 22 points of presence I have in these geographies. Okay, I have a staff strength of around 100 odd employees manning these locations, and my head office is from where I'm talking to you, which is Mumbai. So this is where my presence is. How do I want to go ahead in the overall scheme of things? See, obviously we are a listed company. We are listed on the Bombay Stock Exchange. So anything I would say should not be considered as a forward-looking statement. But nevertheless, I'll tell you about my expansion plan. So what we are planning to do in the current financial year is to basically double my points of presence. So when I would be having today 7 branches, I would be having more than 15 physical branches, by the end of the current financial year. With 15, digital points of presence, by end of the financial year, I would be having more than 30 points of presence. So this is how I'm going to expand in the existing geographies, and over the period of next 36 months, there are other centers where I'm going to expand to. So namely, states like Karnataka, Andhra, Telangana, and Chhattisgarh. So when you see over a period of next 36 to 48 months, the western and the southern India is something which Star Housing Finance is going to cover to and cater to the customer segment.
Right. So that's with regards to where geography goes. Now, if you talk about where overall AUM growth is concerned, What's the outlook looking like, taking into consideration this expansion plan?
So, as I told you that I am present in these geographies, Maharashtra and Tamil Nadu, Hiral, are extremely important for me. And not just for me, for any particular lender, because Maharashtra is number one geography in terms of housing finance demand, more of so in the affordable housing finance space. So that basically is going to get, populated extensively. There is going to be a deeper penetration at the town level, at the district level, and even at the village level for that matter. See, some of the villages, Hiral, they are at a cusp of urbanization. So if you talk about certain villages that are there between Mumbai, Pune, for example, I'm just taking one example. There are several villages that are getting increasingly industrialized. These are my breeding centers. Okay. So that's where I'm going to be present. That's where I'm going to be there. Even if my physical branches, let's say, away from these centers, my digital, capability allows me to be present over there along with the staff. So that is where, I'm going to be present. Obviously, the second geography for me, Hiral, is Tamil Nadu. Tamil Nadu is second biggest market, housing finance market in India, even so in case of affordable housing finance space. So that is where I am going to be present. How I'm going to be present in terms of overall scheme of things. Obviously, as I said that, we have digital lending capabilities being built up, being operational as well, and in stages, we would be offering solutions with one-click digital lending abilities. And this is here very important, because see, you may be able to offer such one-click digital lending capabilities in mark-to-market segment. I'm not a mark-to-market. Okay, I am catering to economically weaker section and low-income group. So there will be definitely a markup with respect to the risk that is getting emanated from this borrow. But nevertheless, the kind of policies and guidelines that we have developed, the credit scoring model that we have developed, enables us to have a one-click digital lending capability. So that's what Star is going to do over a period of next 36 to 48 months. And these geographies are the ones which will be my, breeding centers for AUM growth. So if I talk about AUM growth over the period of next 48 months, I would want to first, transform into becoming a systemically important home finance company, which is 500 crores of AUM as defined by RBI. And from then on, would look forward to build a book of around 2,500 odd crores by 25-26.
Sorry, if you can just repeat those numbers in the next 48 months, what are we looking at?
So as I said to you that, my first milestone, Hiral, first milestone of my company would be becoming a systemically important home finance company, where all my loans would be, in fact, more than 95% of my loans would be retail in nature, okay, catering to economically weaker section, low income group with maximum ticket size of 25 lakhs. This will be my business philosophy. With that in mind, over the period of next 24 months, I would want to grow to become a 500 crores AUM company, which basically allows me to become a systemically important housing finance company as per RBI guidelines. And from there on, in the incrementally next 24 months, I would look to become a balance sheet of around 2,500 odd crores with the pan-India presence, with the points of presence of around 75 to 100 physical branches and equivalent number of digital points of presence over a period of time.
Right. So 2,500 odd crores in the next 48 months is what we are looking at.
Next 48 to 60 months, is the plan. I mean, obviously, many things depend on the COVID-19 pandemic, how it is panning out. But, 1 year or there, Hiral, this is something which we want to achieve. And we should be able to achieve by virtue of the domain that we as a team have across the geographies, across the regions. All my regional directors are having more than 2 decades of experience. And even at the head office, the central office, the senior management that is there, they all have dedicated affordable housing finance experience. So that is what we as a team are planning to achieve on ground here for our stakeholders.
Right. And overall, if you see in terms of where cost of funds is concerned, currently, where does it stand, and how do you see that moving from here on?
That's a very good question. So, our funding profile as we speak today is getting diversified. We have relationship with public sector banks, we have relationship with private sector banks, we have relationship with FIs, and not to mention the relationship that we have with the National Housing Bank, our erstwhile regulator. Okay, that also is there. So when you talk about the overall cost of fund, the blended cost of fund that is being offered from all these institutions, my average cost of fund stands at around 10.25 to 10.5%. So this is my average cost of funds. And my onward lending rate is at around 15.5% on an overall basis. So I enjoy 500 basis points spread, 500 basis points spread on incremental loans, and that gets basically translated into my pre-tax, bottom line. That is what we do. From here on, Hiral, as we grow in scale, as we get rating upgrade, as we get re-rated by our rating partners, obviously there will be a rationalization in terms of our overall borrowing rate, and that rationalization we intend to pass on to our customers. And when we do that, Hiral, we will not just be semi-urban or a tier 2 tier 3 player. Then we'll be moving closer to the city centers. You know what I'm trying to say? So that's the kind of customer segment then I will be catering to. And that's what the plan is over a period of next 48 to 60 months.
Right. So what is that rationalized rate of funds that we are planning to achieve?
So obviously, I would rather say, what is the lending rate I would want to be into. So when you talk about the lending rate, the sweet spot in this particular customer segment is at around 12 to 13%. Okay. When you are at 12 to 13%, at that point of time, you will be able to stand tall amongst your competitors as well. Right now, see, the market is such that there is an opportunity to have peaceful coexistence for all the players. In fact, even more players come to the fore. There is equal opportunity, because India is such a huge country. Housing is never going to go out of place. But when we would want to move closer to the city center, at that point of time, most of these lenders are at around 12 to 13%, which is the sweet spot for retail affordable housing finance space. So we would want to be there. Okay. And when we would be able to achieve there, when our overall borrowing rate comes to at around 7.5 to 8%, and that is something which we are looking forward to achieve over a period of next 36 months to be earliest, if possible.
Right. Okay. And very lastly, in terms of the collection efficiency as well, how is that looking like?
Oh, very important question. So, housing finance is not just disbursement. It is very easy to disburse. Correct. It is very, very easy to, provide finance. But what differentiates a housing finance company from other is its ability to maintain its collection efficiency. And, thankfully, the customer segment that we are serving to, the single largest investment in his life, the first asset he or she, the family basically purchases, and the emotional attachment that is there to that particular asset that he is purchasing ensures that the collection normally happens on time. So just like other lenders, even COVID-19 phase 1, in the first wave, at that point of time we also were impacted. Our collection efficiency at that point of time, fell to around 35% in the first month itself, in the first week itself. But by virtue of this customer segment, there might be up and down in terms of the income profile, in terms of the cash that is coming into it. But the house that is getting bought, the fund which the house is getting bought, will never be allowed to go out of hand. So our collection efficiency right at the end of the first wave went back to 90-95 odd percent. Just to answer to your question, the second wave and third wave has gone. In fact, the third wave, we are in the midst of the third wave or fourth wave, whatever you call. But my month-on-month collection efficiency of this particular segment of 15.5% weighted average, lending rate is at around 97.5 to 98% on an incremental basis. And you have to understand, Hiral, that while this is an overall number, there are around 1,500 odd accounts which I am serving. All these 1,500 accounts may face some issue or the other on month-on-month basis. But what they ensure is that ultimately, when you talk about period of 6 months or so, the overall collection comes on time. So I would say that you don't have to consider on a month-on-month basis, but when you see 2 or 3 quarters of collection efficiency for each of these accounts, they basically come on time. There might be here and there, because these are the first to get impacted, but let me tell you, these are the first ones to get regular as well. So thankfully, the trust that has been reposed in them has been paid back very handsomely to us. However, early days, Hiral, static pool normally gets matured only after 36 months. So I would say one more year of seasoning, and I would be able to give you much more insights on the overall scheme of things. But so far, so good.
Absolutely, and looks like a good growth story as well, especially with the housing sector also picking up. Thank you so much, Kalpesh, for joining us on the show. Always a pleasure to speak to you. Thank you for the insights on giving us the entire growth story of what a Star Housing Finance could look like over the next 48 to 60 months as well. Thank you. Stay safe and speak to you soon again.
Pleasure was all mine, Hiral. Thank you so much. Thank you for having me.
Thank you.
Thank you. Bye.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.